This is the Wealth Roundup with Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns. Any postings and or social media content are the views of the advisor and do not necessarily reflect BMO's position or viewpoint. The information herein is for Canadian residents only and does not constitute any financial, legal, tax, investment, or other advice. Welcome to the Wealth Roundup for the week of May 5th, 2025 with Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns. Terrific to talk to you this morning, Patrick.
Thanks for inviting me on, and really excited to talk about wealth.
Well, let's start with, I guess it's been a very interesting and volatile times considering the first 100 days of the new U.S. presidency and the most recent Canadian federal election. What is happening in the markets and how has all of the political stuff affected that?
Yeah, so chaos would be a term that we could very loosely use to describe the first 100 days. We actually had a fantastic start to the year that ended quite abruptly in and around Liberation Day. We had lots of records set in terms of market volatility, in terms of pure measurement of volatility. So we use this thing called the VIX index, which measures kind of like a standard deviation of returns in the market. And we saw some record-setting days in the market with the market spiraling down both Canada and the United States. But shortly afterwards, we actually regained a lot of those losses. And so you see almost a reverse of some of that volatility. So when we actually kind of look at things in summary on a year-to-date basis, we're well off our highs for the S&P 500, which is a benchmark that we use to measure basically the health of stocks in the U.S. and performance of stocks in the United States. And so the S&P 500, which was down as greater than 10% on a year-to-date basis, is now only down about 3.5% on a year-to-date basis. The Toronto Stock Exchange, which is our measurement of performance of Canadian stocks, is actually slightly positive year-to-date. Not quite 1%, but still on the positive side, which is absolutely remarkable because I think, from really since the Trump win, it didn't take very long for Canadians to feel kind of under attack from our brothers and sisters down south, and the early fears of tariffs on Canadian exports to the United States almost looked like Canada was getting signaled out to be maybe the worst tariff situation, and so it's quite remarkable that the TSX has actually performed better than the U.S. market on a year-to-date basis. Some things kind of closer to home. We look at oil prices. Oil prices are down well off their highs for the year. That's kind of two things there is that oil prices tend to move with the outlook for the global economy, and so with big question marks about what the tariff impact is going to be, not only here in North America, but globally, is that there is this expectation that demand for oil could perhaps be less as the global economy maybe slows under the weight of tariffs. But there is also OPEC trying to protect market share. And so OPEC is actually increasing their supply while oil prices are falling. And so that is only compounding weakness in oil prices. So certainly something to watch there. We often look at one other factor here that's very specific to the Alberta energy situation, which is the differential between, say, West Texas Intermediate oil and Western Canadian Select. And so that's an important factor for us because we send so much of our say oil coming out of the oil sands down to be refined in the United States. So that differential is really, really key. We really want that differential to narrow, and it has been broadening out. So we have a broadening out in the differential. We have a lower overall price, and we're not expecting any of that to change anytime soon. Fortunately for Canadian oil producers is that This has been an extended period of time where Canadian oil companies have had to be very careful with their spending, and actually most of the bigger Canadian oil companies are in really good financial shape. So yeah, so lots of things to talk about. That's one of the great things about my job is there's always something to talk about.
And we have a brand new prime minister who doesn't have any political experience, so to speak, but he has a lot of financial experience. How is that going to affect the Canadian economy with a new prime minister?
So in the short term, so we're going to be calling back Parliament here within the month, probably a budget in June. When we think of what the platform primarily was for Carney, it was obviously having a plan for working with the United States, our largest trading partner. We're their largest trading partner. So there is going to have to be finding some common ground. That is going to be the most important thing. And certainly going and looking at his work as the former governor of the Bank of Canada, governor of the Bank of England, his time working at Goldman Sachs, his time working for Brookfield, is that we would think that while he's not a political heavyweight, is that certainly in the economic circles, is that he should be able to find some common ground. He should at least have a very good idea what the U.S. Agenda is, and I think he's going to have to, first of all, deal with internally here in Canada. What can we do here in Canada to maybe make up for some of the headwinds to tariffs? He talked about housing. That's a major, one of his major platforms was coming up to a solution to the lack of housing, the high price for housing. We think that's going to be a real challenge. We think that the housing industry right now, when we think of construction, is that there's not a lot of additional capacity there. So that's going to be a real struggle. There's going to be some infrastructure spending, which is kind of the playbook from recession 101 is spending money on infrastructure. Some talk about tax cuts. So we should see that kind of play out in the budget. Only time will tell. Only time will tell.
Okay. And what planning, if any, should Canadians be doing with their finances that they're currently sitting on?
So I always like this. What's within our control. There's so many things in the world that are out of our control. So what's kind of within our control? So many Canadians have recently done their tax returns. So I think this is a really good time to kind of call it some spring cleaning for household finances. So in recently meeting with your accountant or recently filing your taxes for yourself, is that you probably found some do-betters, and that may be keeping better records. In most cases, if you're saving for retirement, most people would like to kind of say, I wish I could find ways to save more. So by going and addressing that tax return, shortly most people will get their notice of assessment. That notice of assessment will talk to them about, what their RSP room is for the year, what their unused RSP room is for the year. If people haven't yet done their tax-free savings accounts, because we've been, thoroughly looking at our taxes, probably many people have kind of logged on to their Service Canada website. They'd have a very good idea what their tax-free savings account room would be. But I think this would just be a really good time to start tracking expenses, start thinking about what your savings is going to be for the year. Again, at tax time, it's almost like a report card of how you did with your finances for the year. And so, when you've got a lot of responsibilities, household responsibilities for the year, sometimes going and managing the household finances, it's not the number one priority. And often in a lot of households too, it's maybe only one person in a household that actually takes care of the finances. So good time for the household to kind of come together and say, okay, here's how we kind of ended off the year. This is what our tax situation was. What can we do differently here for 2025? If in talking to our accountant or doing our taxes, we realized, we should have kept better record keeping of maybe some tax deductible expenses that we had in the household. receipts that we didn't keep. Well, then let's do a better job of keeping those. Let's do a better job of maybe tracking those savings, maybe looking for ways to save more money throughout the year. Maybe do some goal setting for the, say a quarter out or 2 quarters out to say, we're going to revisit this again. But I think tax time, this is a really good time to start over again. It's kind of like a New Year's resolution after Christmas and saying we're all going to end up working out more or eating better. Tax time's a really good time to start.
All right. Very good. Great suggestions. This has been the Wealth Roundup for the week of May 5th, 2025 with Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns. We'll be back again next week.
Thanks, Terry.
This has been the Wealth Roundup with Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns. I'm Terry Evans. The Wealth Roundup is part of the Reluctantly Podcast Network.